Hey guys, welcome back to our channel again. Today in this very important video, we're going to understand what is risk to reward ratio. So if you haven't our previous video where I was talking about the long positions and short positions kind of tools which we're going to use in day-to-day markets, day-to-day live trading. So in those videos, I was trying to explain you what is risk to reward ratio, but that's not the particular topic of our video. We're just covering on a side basis to understand the long term, how you can use your long position tool and short position tool. So today in this dedicated video, we're going to understand just what is risk to reward ratio. Okay. So, from that note, I will start it. And risk to reward ratio समझने से पहले you have to understand one thing, that in this market you cannot survive if your risk to reward ratio is not good. First thing, you cannot survive in the market if your trading psychology is not good and your money management is not good, irrespective of how much trading setup, trading strategies you are using, how many supercomputers you are using, that is just end up getting zero if your this things is not matched. Okay, so risk to reward ratio is one of the most important thing, and so if I will show you that it basically says in the market we just stake our some money to get back the interest, the money we're putting in into the market. We want to get to earn an interest from that money, right? So if it will gonna lose it, so if it doesn't work out as we want, so we're gonna end up losing our money. But how much we think, how much we will lose in our hand if you have let's say 100 rupee, and we are all came here to speculate in the market. We Nobody knows where the market will go, how the next candle will form in the next minute, but we can analyze, we can trade into our behalf. Okay, so everyone's psychology is different, everyone think differently, and everyone think different, and it is something which you should have to must know in the market. Okay, so basically if I will gonna see that your risk to reward ratio is the most important thing. Okay, so your let's say in the market you risked about your 100 rupee, and I'm telling you that in the market you can only just control your how much money you want to risk. Okay, so let's say you want to risk 5 rupee per trade and you want to earn 10 rupee. So that means each and every one trade, if you are gonna wrong in that trade, you will end up losing 5 rupee, and if you are winning that trade you will end up getting 10 rupee. So that should be your risk to reward ratio primarily, and that is called as a 1:2 risk to reward ratio, which means that if I will gonna lose 5 rupee, then I will gonna earn double of it. Okay, so it could be an example of if I will gonna lose 10 rupee, then I will want to 20 rupee from the market. Okay, so that is also a 1:2 risk to reward ratio. There is a risk to reward ratio called 1:3, 1:4, 1:5. You can get anywhere into it, but that is primarily you have to enter into the market. So please don't be cheap on you. Don't enter into the market with the mentality of 1:1, because it will not make you profitable at the end of the day, because in the market there is no one who just lose each and every time, and there is no one in the market who earn each and every time. So the profit and loss is the part of game. You have to habituate on that, right? So back to our example that we have 100 rupee, and each of the trade, if you lose, then you will lose 5 rupee, and if you win you will get 10 rupee. Then after 10 trade, we just take an hypothetical example of the 50-50 position. Okay, so after you are getting 10 trade, so we think that you lose 5 trade and you win the 5 trade. So if you lose the 5 trade, then how much you will lose? 5 into 5, right? So you will lose 25 rupee. And if you win those 5 trade, then we'll see, we're just taking an example of 50-50 percentage. So after putting your indicators, after putting your psychology, after putting your strategy, so it will not above the 75 to 70%, I would say, but in the range between 50 to 60, even 65 is far more better. But those who just giving you that we are going to give you 80 to 90% uh, percentage win in the market, so that is not basically possible. You have to stay away from those people who just give you the these rumors and give you the knowledge kind of stuffs. So just thinking about it, then if it is actually possible, then why they would sell their courses and why they would become millionaire into uh, you know into few days, if they have literally 70 to 80% win rate. Okay, so back to our topic. We have lose 25 rupee, and on the contrary 5 trade we own, that we will end up earning 50 rupee. Okay, so our net profit is 25. So that is the power of risk to reward ratio. Without doing anything, you have to just work on your risk to reward ratio. You are profitable at the end of the month, at the end of the year, if your risk to reward ratio is good, and if you and your trading psychology is good, right? So I think you get it. And if you have any query, you can ask me in the comment section. Definitely, I will try to answer your questions, and I will see you in the next video. Bye.